Hey traders, welcome back. So in this video we are talking about top Forex questions, part 2 of a multi-part video series, and these are some of the questions we've got from the internet, from comments, from all those kind of things. If you're a new trader, perfect for you. If you're a bit of a seasoned trader, you probably know these answers already, but if you've got any thoughts, would love to hear what your thoughts are in the comments section below, as always, guys. So top Forex questions. Who are the participants in the market? You know what, there's such a broad amount of participants. Traditionally speaking, it was interbank. In other words, banks would trade against each other, interbank, so the name came from. One bank would trade with another, Goldman would trade with UBS, UBS would trade with Deutsche, blah, blah, etc, etc, etc. That's how it worked. It's now spread out into, you know, governments are getting involved in it. Governments would trade with banks, hedge funds would trade with banks, companies would trade with banks to reduce their currency exposure if they're doing business abroad, or they're making income in a different currency to where they're situated, or paying out salaries in. You know, private speculators, such an array of different people. So the participants are so broad. Obviously, people like you and I are not going to influence the direction of the market. If you've, however, got a load of banks who are buying on behalf of clients or taking positions for themselves, and not so much anymore, but if that was the case, then you are going to get that moving the market. And the same if a government is kind of selling currency or buying currency or of one other country or whatever it may be, or debt, all those kind of intermingled things. So loads of participants, loads of people to consider. Number 2, when is the Forex market open? It's open 24/5, guys. It's open from Monday till Friday. Well, it's open till Sunday night till Friday, depending where you are in the country and where you are in the world. Have a look to see when it opens for you and when your broker will start offering it. But Sunday night, the currencies start trading, and they don't stop trading. They trade all the way through, right the way through till Friday evening when they close. So you can trade them at any point in time throughout there. Again, depending on your broker, where you're in the country, or in the world, should I say? I keep saying country. World is where I mean, because it's going to depend on what time they close and what time the broker stops offering it, and when the liquidity is dried up, because it's an over-the-counter market. So 24/5, unlike stocks, which are specific opening price and a specific opening time in the morning, specific closing time in the afternoon. That's your lot. That's all you can trade it. Currencies, not the case. 24/5. All right, guys. The third question I have here is, what are the most commonly traded currencies? Well, you've got your big ones like US dollar. That's obviously your dollar. You've got pound, which is Great British Pound. GBP is the code for that. You've got JPY, which is Japanese yen. You then got AUD, which is Australian dollar. You then have CHF, which is Swiss franc. What have I missed? Of course, I've missed euro, which is EUR. What else have we got? I've forgotten CAD, Canadian dollar. You've got NZD, New Zealand dollar, not so much. I probably wouldn't put that in with those. So the most commonly traded ones are probably going to be your US dollar, obviously the biggest economies out there. So US, Britain, Great Britain, Japan, Europe, Switzerland, Australia, and then you've got Canada, and you've got others as well. But the main ones are going to be the crosses and pairs between these two. So you're going to have, you know, US dollar, JPY would trade together, GBP, USD, USD, Swiss. Have a look at your broker platform, have a look around and see the difference. Those are the main ones that you're going to see traded, the most commonly traded ones as well. And when I say commonly, the ones that have got the most money flowing through them. As well. Let's scrub that off quickly. Let's move on to the next question. So the last question I have in this video for you guys is, what does it mean to be long or short? Long basically means that you are looking to profit from the market moving up. When I say the market, I mean a specific pair. So you are trading, let's say you're trading GBP USD, which is the pound against the dollar, and the chart is doing this. Okay, if you go long, you will make money if the market goes up. So in other words, you're buying, you're bullish, you're looking to make money from that price moving higher. If that price moves from 1.1 to 1.2, you are going to make the difference multiplied by your stake. However, if the price goes lower, you are going to lose money. We talked about this in the previous video very briefly. What does it mean to be short? It means the opposite. So if you've got the same kind of scenario here, you're trading the same instrument, and here you're going short, at 1.1 and it goes down to 1.0, you are making money. You're making the difference. If you're short, you're selling, you're a bear, you're looking to make money from the market moving down. You're going to make that difference there. If the market goes up to 1.2, you are going to lose money because you are going to lose the difference between 1.2 and 1.1 multiplied by your stake. Just remember, short is looking for the price to move down, bears. And a little thing, guys, is that bears, the reason it's called bears is that bears attack the downside and they push stuff down. The reason it's called bulls is because the bulls push up with their horns, like my bull impression. That's where it comes from. So that's long, that's short. If you're long, market go up, short, looking for the market to go down. That's how you make your profit. Okay, next video, guys, talk about some more top Forex questions. See you there. Bye-bye.